Hello and welcome to this new video. In this one, I'll try and cover a few interesting topics and I'll try to keep it short and hopefully crisp. So, the first one I wanted to talk about was this article that I wrote a few days back, just after the uh, Q2 GDP numbers were given out. I've given the uh, link here and I'll add it to the notes in the comments in the video. If you haven't read it, you can read the article. But essentially, what I have tried to cover is, let me just scroll up here. This is my blog, by the way. I just also post whatever learnings and interesting things that I read. So if you've not subscribed to my blog, you can do that as well. Uh, so the point is that forecasting is actually a very difficult thing to do, and people who have a huge amount of experience, people who've spent their lifetimes uh, in a particular field and are considered experts, even they cannot get it right. In the book Super Forecasting by Philip Tetlock, there was this case where the author was collating forecasts by different army, navy, air force, generals and specialists about what about incidents that they were expecting to happen in the near future. It was not like 5 year, 10 year kind of thing, monthly, quarterly kind of forecasts. And he was shocked to see that people who've spent 20, 30, 40 years, say, specializing in the Middle East and specializing in maybe even one country in particular, they were unable to get the forecasts correct uh, with any amount of or any degree of consistency. So the point here is that forecasting is something which is very, very difficult. But the important point is that forecasting uh, is, what tends to happen, and especially while we are, in investing, what I have seen is most of the time what people do is just extend current trends. So if the market is in an uptrend, people just say it will keep going up and give you higher guidance. If it is in a downtrend, people will say, we'll go down to this level and etc. So mostly people have no clue. They just extend the current trend to the future. uh, Unfortunately, forecasting is something that is essential to investing, right? Because no matter what uh, kind of analysis you do, whether you are a fundamental analyst, whether you are a technical analyst, whether you are a macro analyst, all information that is available to us is in the past, right? All data is about the past, whether it is company returns or company P&L account, balance sheet. All of it tells you about what has happened in the past. Technical charts, quantitative analysis, everything is about the past. But the returns that you will make is going to be in the future. So you have to understand, or you have to have some kind of view about the future. And to have that view, you need to either forecast or have some assumptions about how the future is going to play out. So that is why, you know, unlike academicians, we cannot walk away from forecasting or making future projections. So one thing that we have to do when we are making projections or when we are looking at the future and forecasting, I think is there are these 4 points that we have to remember very clearly. One is you have to actively look for continuously additional information. So you've made a forecast about, say, a company or an industry, uh, and you believe that the company is going to do well, but you have to consistently keep looking for new pieces of information, whether it is related to that industry, some policy changes, uh, people coming and going, uh, in the company in terms of management changes, changes in the products, what competition is doing, so all of that. So keep looking for additional information. Keeping an open mind, that is very important, because a lot of times what happens is once somebody takes a position, then the endowment bias comes into the mind. So you start feeling that what I own, is more precious than what is than the rest of the stocks out there, and automatically you start weighting less contrary information, right? So that is something that again we have to be very very cognizant about, that we are always going to look for information that can negate our thesis. The third thing which is very important is having a framework in place, a mental framework in place to deal with new information. So I've taken a bullish view on a stock, a new information comes in, say a management change has happened, CEO has changed. So how does it impact the business? How does it impact the company? That is something you have to look at. uh, Within this, then just let me give a practical example. So let's say you are using any framework. So one framework I really like is say QGLP, uh, that Ramdev Agarwal has popularized, or say another framework that comes to mind is CanSlim. So these kinds of frameworks, you have to integrate the incoming information and understand that where it fits into that framework or into that puzzle. So say in QGLP, is it integrating into the quality of the business and the quality of management? How is it going to impact growth? How is it going to impact the longevity of growth, and so on? In CanSlim, for example, is it going to change growth numbers? Is it going to be uh, responsible for something, a new product or a service, and things like that? And then finally, our ability to take action. So whenever some new information comes in, we should be open enough to integrate that into our framework, and then take whatever action that our framework sort of suggests. So if uh, we feel that now with this new change, the business is going to deteriorate, then we should be able to either reduce our position size or completely get out. Conversely, if we feel that this is going to strengthen the business and is going to do better than what we had envisaged before, then we should be able to add on to our position size, or buy more. So that is how I think we need to be able to think through when there are changes to a particular forecast or assumption about the future that we've made. With that, I think slightly changing tack in terms of what these GDP numbers mean for us as a country and as an economy. I think uh, it's very difficult to conclude anything from a single quarter's data. A large part of this slowdown could probably be uh, due to the heavy rains during monsoons, due to central elections. I think what happens in elections is you get into this model code of conduct, and then mostly all files stop moving, and because our economy was so largely dependent on government capex, uh, once you have these pause or holds in file movements, in new projects, in project sanctions, in tendering, then obviously there is going to be a slump in uh, in the expenditure and in the overall economy. uh, I think this is, again, I mean, this is already showing signs of turning around, and government and the finance ministry is already giving out a lot of indications that they've pushed the foot to the pedal in terms of pick up in capex. So next 6 months should be much better than what we saw in the last 6 months. So last financial year, I think the growth was front ended, because again the government knew that the elections was going to come up, and this year I think the growth in the economy is going to be back ended. The other thing that is going to happen likely is that there's going to be a lot of pressure now on the RBI for reducing rates. I don't know how much of it is going to be possible because inflation is also very, persistently high, and unfortunately for India, the basic two components that drive CPI is food inflation and fuel inflation, and none of these, both of these are not controlled. You cannot control them by monetary policy. You cannot, Reserve Bank cannot do anything to tinker with rates and with money supply, etc., to reduce prices of vegetables and food grains. Neither can it do anything about uh, oil prices. So inflation is something of a wild card in this whole scheme of things, and so I don't know how much leeway RBI is really going to have, but there is definitely going to be a lot more push from various quarters to uh, at least look at a rate reduction. So I think we are closer to reducing rate regime than maybe where we were a month earlier. And in this whole scheme of things, there are some sectors which I really like. I think obviously railways has been a favorite. I think roads, airports, logistics, defense, I think all of these will be in the focus. uh, with the recent correction, I think some of the frontline companies in these sectors have seen a fair bit of correction, and uh, we could see some consolidation and an up move. So the risk reward for patient investors could actually be good, but we'll need to pick your spots within these sectors, uh, looking at growth, looking at the management quality, etc. The other, few sectors which I really like are chemicals, IT, and the entire healthcare pack. So in healthcare, when I say healthcare, it basically means pharma. It means pharma as in the formulations, generics, CDMO, APIs, right down to hospitals and diagnostic chains. So all of this, the entire value chain looks pretty interesting. IT, I think maybe we've made a bottom. It's going to look better with a strengthening dollar. I think all these export-oriented sectors likely to do well. And I think short term, next 15 days, 1 month, 2 months, what will happen is very difficult to say. Uh, we could see a Santa rally, last month in December, or we could, sort of see a grinding consolidation for the next couple of months. And even if we see a rally, I think it's going to be more of a consolidation rally than a tear away rally. So uh, the best way uh, to proceed in this kind of a market is to continue your SIPs or keep investing regular amounts in the market. If you have to buy a stock, just spread it out over a couple of weeks, so that uh, it one is obviously you'll get slightly an average price, but the other important point is uh, it gives you mental sort of strength when you are staggering and buying, because in a choppy kind of market, one, let's say you buy the first day and then the market falls, or your stock falls for 5%, you'll not feel as bad because you can buy incremental chunks later. So that, I think, is an important strategy to have. So that's what I covered in this article. Again, I'll give the link if you are interested in reading through it. A couple of questions, in fact, that I received during this month. One is, what's your opinion on Donald Trump and how it is going to impact uh, India and impact the stock markets? And what about the threat to uh, the BRICS currency, etc., etc., etc.? So first of all, I think Creating an alternate currency is extremely difficult. It took 34 years, if I'm not mistaken, to launch the euro from the first time it was conceived. And to do that, there had to be a lot of background work in terms of political consensus, bringing in European nations together, having a broad administrative cooperation, and I think that is completely missing in BRICS. So you can't really have a group of countries suddenly coming together and saying, let's have a currency. It doesn't really work that way. History has taught us that having a strong currency requires very strong uh, technological backup and very strong military backup, and none of which is possible if you are not politically in cohesion with these countries. So I personally don't think the BRICS currency is actually going to take off at all. So the threat to the BRICS currency is just, it's an academic point. The other thing I think that Trump, everyone is talking about, and Trump keeps tweeting about, I'll put uh, X percentage, you know, tariffs on this country and that country and Mexico, Canada, China, etc., etc. I think, see, what happens is, in today's world, if you put trade barriers on one country and that country has uh, is producing goods and services that is required by other people, people will find a way of circumnavigating that, and we've seen this multiple times. Very recently, you look at what happened to Russian oil, Russian gas. Europe continues to consume as much as Russian gas as before. Most of Russian oil now gets channeled through India and China, and then passed on to Europe, etc. So, if you, same thing, look at what happened with when India stopped, or India said we'll stop importing from China, or US says we'd stop importing from China. It just goes through a more circuitous round. I know, we've seen reports that Chinese goods go to either Vietnam, Indonesia, Malaysia, Dubai, and then come to India. Just somebody else puts a tag, and then you pass it through. So these kinds of things will happen. It's very difficult to uh, completely change supply chains overnight. It takes many years. The dependence on China globally, I would say, did not happen in a year. It did not happen in 2 years. It took 10, 15, 20 years. And to unroll it will take, if not that much time, but at least half of that time. So it's not going to happen overnight. And then there will be vested interests within America which will prevent, or which will try to bring in a little bit of sanity into all of this. So, for example, Elon Musk, he has his biggest factory in China, and he's a very close ally of Donald Trump. So I don't know how that will play out. So the point I'm trying to make is that this is a very complex situation. It's not going to get resolved, or it's not going to get driven by what we see and hear on Twitter. Right? Twitter pronouncements are not policy. So that's, I think, what we need to be very clear in our minds. And again, the last point about you know trade barriers, sanctions. I think these, again, exactly like tariffs, most of the time I think they don't really work. Uh, we've multiple cases in history. Uh, Iran was embargoed and had sanctions. They've sort of pretty much created a nuclear facility, if news reports are to be believed. Same thing with North Korea. Same thing with again, after Pokhran, India was sanctioned against. If I remember correctly, National Aerospace Laboratories (NAL) came out with one of the most powerful supercomputers during the time when the sanctions were up, when we were unable to import chips, etc. So again, recent example, Huawei, they were completely sanctioned off by the US. They've come up with a new mobile OS, new chips. So really sanctioning somebody or some company or some country who are determined is not really helpful, because maybe it has a short-term setback, but ultimately they find a way out, and most of the time they emerge more stronger. So I think we need to keep all of that in mind, and wait and see the actual policy changes that Trump makes. I don't think we need to jump the gun and be very reactive to everyday news flow that comes in. The job of news media is to always sensationalize news, but we need to be able to, take a slightly a distant view and see what is actually happening and changing. With that, I think, again, moving on. This is a very interesting book that I read very recently. It's called "The New Confessions of an Economic Hitman" by a person called John Perkins. He's a consultant, or he was a consultant. It This book is for people who like, conspiracy theories. Uh, the author apparently used to work for a very large US consultancy, which he claims used to be sort of working in cahoots with US intelligence. And the book spans basically from the early 70s onwards. And uh, they talk about how these, economic consultants used to work for, is to go into a country, especially a developing country or a poor country, convince the leadership there to accept massive loans from the World Bank, IMF, and all of these agencies, and then hand over large infrastructure projects to US companies. And so much so that the host country would end up becoming unable to pay the debt, and then sort of be beholden to uh, US and its allies, and ultimately US would take control directly or indirectly of the country's resources, mining resources, oil, if there was any, those kinds of things, and sometimes create military bases and so on. So he's gone through multiple examples where it has happened in South America, in Southeast Asia, Middle East. Very intriguing, interesting book. And it also gives you a glimpse of how the world really works behind the scenes. So people who are, who want, who are interested in this kind of books might find it a very interesting and fascinating read. So with that, thank you for listening. Thank you for watching. Do let me have any questions on my Twitter or LinkedIn. Those are the two that I really use. Or you can comment uh, on the video or on my blog. Send me your questions, comments, and see you soon.